world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Welcome to another episode of Founder Sessions, the series we run at Rebank, highlighting leading founders in the fintech space, digging into the early days of their entrepreneurial journeys, and telling some of their founding stories. Today, we connect with David Vélez. David is the founder and CEO of Nubank, Brazil's leading digital bank, and one of the most amazing stories coming out of Brazil in recent years. Nubank has 5 million credit card customers, 2.5 million bank account customers. They've raised more than $420 million from some of the leading investors in the world, including Sequoia, Founders Fund, QED, Tiger Global, Ribbit, Tencent, and more. Before founding Nubank in 2013, David was a partner at Sequoia. Prior to that, he worked at Goldman, Morgan Stanley, and General Atlantic. He brings a wealth of finance and financial services experience to Nubank. But I think it's interesting to chat with him about the earliest days of the company and the thinking and analysis that he did, which led him to what ended up being a massive market opportunity, and one that he and his team have executed on extremely well. Connect with Rebank on Twitter at Rebank Podcast, on Facebook, LinkedIn, or on our website at bankingthefuture.com. If you enjoyed today's episode, subscribe on iTunes or your podcast platform of choice, and absolutely please leave us a review. We are extremely grateful for those who take the time to rate us, review us. It means the world. Thank you very much for joining us today. Please welcome David Vélez. How did you recognize the market opportunity initially, and what did you do personally to build certainty around it?
Sure. So I'm originally from Colombia, but ended up working here in Brazil in private equity with a firm named General Atlantic, and then with another venture firm called Sequoia Capital. I had the investor hat, trying to find good investment opportunities in the technology industry. And after 2 years of going around looking for companies, concluded that there was actually, unfortunately, not that many great tech companies, but there was actually more opportunity on the entrepreneurship side of things. And in one personal dream of mine, had always been starting my own company. I come from a family of entrepreneurs, and that was sort of the motto growing up was, you got to go on your own. You shouldn't have a boss. That's the path to follow. So in 2012, I left Sequoia to just focus on what business opportunity to start in Brazil. I was, in a way, lucky that I had a really horrible experience with one of the banks here trying to open a bank account. It took me about 5 months to open a bank account and get a credit card that was charging me about $200 a year in fees and had a 500% APR. And it took me about 8 times to go to the branch to bring documentation, to go through a bulletproof door where I had to leave all my belongings, my bag, my cell phone in a locker outside, where I had to wait 30 minutes to talk to a branch manager that would ask me for more paperwork. It was really sort of I would call it a literally life-changing experience, because I just couldn't understand how Brazilians were going through such a horrible customer experience, and they were paying some of the highest APRs in the world. And I couldn't understand why anybody was really competing with the 5 big banks that had some of the highest returns of equity in the world and some of the highest growth rates in the world. So I started understanding the industry better, realized that the market size was enormous, and that, the regulatory aspect and funding, and there were a lot of really hard problems to solve, there was just a big market opportunity, and with that, ended up going back to my previous employer with Sequoia. And while they initially said no, we don't know anything about Brazil banking, and we don't want to do a seed round. After a couple of conversations with some of the partners there, they ended up getting excited about the opportunity here. And so they, together with another local investor, Casic Ventures, ended up providing the seed round to get Nubank going.
Surely there's a reason, maybe it's not a good reason, but some sort of reason that the incumbent banks in Brazil make it so difficult to open accounts and charge such high interest rates.
Yeah, I mean, I think if you ask them, they'll tell you that credit losses are very high, and that's why interest rates need to be that high. But then I could tell you that since interest rates are that high, then credit losses are that high. When you're paying 15% per month interest, your balance is doubling every 2-3 months. Who is able to pay for that debt? It's just ballooning. It's getting out of control. So I think there's just a ton of conventional wisdom. When you talk a lot with the traditional bankers, they'll tell you that that's the way things are, that you cannot compete with the big banks. Those first 3 months where I was trying to understand where there was a big opportunity, everybody I talked to told me it was impossible. They told me, oh, you're not Brazilian, you're a foreigner, you don't understand this country, you can't compete with those big banks, the regulators won't let you. The internet is really poor, so nobody would ever do a fully digital bank. That's why Brazil already was top 5 in the world in Facebook and in WhatsApp and Instagram and LinkedIn and Twitter. So what I found, it was just a market that they were just full of conventional wisdom, and people were just too scared to challenge that conventional wisdom. And then maybe the other thing that happened that enabled the opportunity was internet penetration. If in 2005 you would have looked at this market and you would have concluded that there was a big opportunity to compete, you would have needed billions of dollars to create a banking network everywhere, because that was the basis of competition of the big banks. People would decide to open a banking account with whoever bank had the closest branch. And so the other thing that was in our advantage was the why now, the timing. 2012, 2013 was sort of the right moment where internet penetration and smartphone penetration was getting to a place in Brazil where you could create a fully digital financial services platform where you didn't really need any offline infrastructure. And so we were lucky also in having the right timing to launch this type of product.
Was there any sort of regulatory framework for a digital only like account opening process, or was that something that you had to work to develop with the regulators?
There wasn't, and there still isn't. There is not a digital only sort of license. It's just been a lot of work of understanding what the existing licenses allow and rethinking processes or creating digital processes that match the existing regulatory framework. So we haven't really been able to, or the regulator hasn't really been able to create new licenses, or I think they've been a little bit more willing to accept redefinitions or redefinitions of existing processes that match and fit with digital banks only. But there's been a lot of back and forth work to be able to enable that.
So as you think about, think back to kind of the early days, at what point did you know that you were really onto something? You like had a product in the market, you were getting customer feedback. Was there a tipping point or a moment when you knew this was really potentially big?
We launched the first product. The credit card was a credit card that we used for the first 12 employees. And then we used that product for maybe about 8-9 months. And then we officially launched the company in September of 2014. And for a few months, there was very little demand. There was some press, and we started seeing some people inviting other people, but nothing crazy. I think towards the beginning of 2015, we were lucky that there was some press around us, and there was one specific day where the demand was insane. I think there was one day where we got like 5,000 applications, and we had 1,000 customers at that point. And not only that, we started seeing people really inviting. We started seeing that virality rate, the referral rate, going up and up and up and up. And so we decided, okay, we have something here going on. The demand started to increase so much, we had to actually create a waiting list because we couldn't fulfill all the demand. And what the waiting list ended up creating was actually more demand. Suddenly the product became scarce, and the referral rate continued to go up. And so it's sort of all these things start to happen in parallel. And yeah, we just saw numbers increasing effectively daily, and the demand going bigger and bigger and bigger, the PR on the product increasing, and sort of all of these elements start to reinforce each other.
What was, I guess, kind of looking at it on the flip side, what was the hardest thing about starting Nubank? Or was there like a specific, big challenge early on that you had to overcome?
I think regulation has always been one of the biggest challenges and continues to be, just because we cannot get it wrong. We have to be compliant 100%. There is no 99% compliance. There is no room for error. So cracking or thinking through that has been hard. The other thing that has been really hard is we started different from a lot of challenger banks that began with a debit card. We started with a credit card, which means we needed a lot of funding for our lending portfolio. And we had to figure out how to fund that through the worst economic crisis that Brazil has seen in 100 years. So basically everybody, we told them we wanted to start a credit card business, focus on millennial, with no credit data in a market that has no positive credit bureaus, and we needed funding. Said, you guys are absolutely crazy. Look at the macroeconomy, look at the unemployment rates. It's a completely kamikaze move. So finding debt funding was very, very hard. Effectively, after a lot of knocking on a lot of doors, we were lucky to be able to create a very smart and sophisticated structure with Goldman Sachs. And while it was very expensive initially, we were able to fund the business and give us breath to continue growing our portfolio and building better models and showing significant improvements on underwriting rates, and ultimately being able to convince debt lenders that we were able we were good at underwriting credit, even through the worst economic crisis in Brazil. So, I think now that things are improving in Brazil, we feel very strong because all our underwriting data has been built on top of the worst macro crisis. A lot of our lenders in developed markets only know the good times. They don't know how their underwriting models are going to behave in the bad times. And we know the bad times very, very well. But anyway, it was a very challenging situation of trying to figure out how to fund a business that required a lot of capital.
What knowledge did you take from your time as an investor that informed how you approached Nubank? Either lessons learned through investments you'd made or watching other companies start out?
I think some of the lessons learned while I was at Sequoia was how important the early days of a company are. At Sequoia, we always used to say that the culture of a company is built in the first 3 to 6 months with the first 10 employees. After that, it becomes extremely hard to change the culture of a company. In a strong culture, it's not created. It doesn't sort of happen naturally. You have to be very tactically thoughtful. You have to be very strategic. You have to be very clear since the very beginning what are the values and what are the type of people that you want to be hiring. So those are some of the things that I took from Sequoia that I was very mindful of doing since the very beginning. And today, while scaling that culture is a hard job, especially when you're bringing so many new people, I think we have such a solid base, and the core team is so strong on those cultural values that ultimately that's what allows us to scale culture and be able to maintain our values as we scale. So that was one big lesson. Second big lesson is obviously look for big markets when you start a business. It's very hard to build a big company in a small market. That's why I think as I looked at different ideas, financial services was as big as it gets. 5 of the top 10 Brazilian companies are banks, and I think that's true for almost every economy. If you look at the top 10 or top 15 public companies in any market, you're generally going to find banks in that list. So that's why operating in a very big market gives you space to gives you a lot of runway and be able to create and build a large company. And I think third is just how important execution is. I would say a successful startup is 1% the greatest idea and 99% is execution. Everybody has ideas, everybody has views, everybody has opinions, but ultimately executing, especially in fintech or financial services, there's so many things that need to happen right. There's regulation, there is funding, there's technology, there's culture, there's customer service, that being able to build a team that can execute extremely well, it is the difference between success and failure. So building that, creating that team that can execute and being able to be good at execution is ultimately a great advantage.
David Vélez, thank you very much for joining us today.
Thank you, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.